Hello to all traders, and welcome back once again to another engagement for the non-farm payroll. So a little bit of a subdued and weird non-farm payroll as it's a bank holiday pretty much all over the world, but the NFP is going ahead. It's not a federal fund holiday, so it's important to note that when the Fed is not closed, then the markets are open as usual, but not all the markets. We've got FX markets open, we've got oil and gold that are closed, and obviously the US market as well, which is closed for today. So how will the NFP react, and what are we looking at in the near term as well? Because we have been on that side of the coin where the NFP has given us quite a big jobs number, but the markets haven't really moved that much. So we're expecting a little bit of a subdued opening for the next NFP. But once again, you never know how the market's going to react, and is there going to be enough liquidity in the market today for it to move quite significantly? But before we get into the charts, before we go into anything, just going to go through a quick disclaimer just so that we're up to date with everything. So foreign exchange trading and investment in CFDs can be highly speculative and may result in losses as well as profits. Foreign exchange and derivative trading is not suitable for many members of the public, and only risk capital should be applied. So it's important to only put your risk capital at risk, basically. This webinar is provided with information purposes only, and no information contained herein constitutes solicitation for the purpose of purchase or sale of any commodity, security, or investment, nor should serve as a base for any investment decision. Orbix Limited does not guarantee the accuracy or completeness of any information or analysis supply. This is my own analysis, and my special guest Daniel will be joining us once again shortly, so he'll be giving us his insight and just going on a few of the charts at the moment. Don't want to bore you too much as usual with a bit of jargon. Just want to get onto the charts as soon as possible to see where we're coming from and where we hopefully will be going. So for this time around, the previous number was just over 300,000. Now we're looking at roughly about 240,000 new jobs being added, give or take a few thousand. Unemployment rate is supposed to be staying steady at 3.6%. Sorry, we're looking now at, if you just look at the chart at the bottom here, we had this great jobs number in January's NFP release, but that was expected due to the holiday season in America. And we're looking now likely that jobs will just kind of plateau and subdue, roughly like we saw after the summer period in 2022 last year. So 350,000 jobs being added, roughly, give or take, dropped below 300,000 mark, but we just have been hovering roughly around that particular area in the near term as well. So very, very interesting in that respect. US weekly jobless claims jumped above 200K once again. The last few weeks it's been hovering roughly around that particular mark, but this is a weekly event, so it is something not to take too seriously for the US weekly jobless claims. It's not a big fundamental impact such as the NFP is that in that way. Just another thing, because we are live, we've got the chat overlay as well. So any questions that you may have for me or Daniel as we go along, we'll see what's happening. But obviously our gold traders will be a bit disappointed today because gold and silver and the metal market is actually closed. Commodities in general pretty much closed. So we've just got the FX pairs to look at the moment. So we'll see if that's going to have any coincidence or complications for the jobs numbers that is coming out. Just want to touch on the annual inflation as well, because it's slowed to 6% for the 8th consecutive month. This was the last reading, 6.4%. Now we're slowed to 6 as well. So very, very good readings, and actually the lowest since July of 2021. So quite a big decrease in that respect. And what does that mean for the Fed? Are we having a terminal rate coming up for the Fed interest rate decisions? We're going to see more easing, more tightening. This will give us a direction on when the dollar's going as well. So this is something to look forward to in the near term as well. So very, very exciting numbers there. And just another quick look on a couple of other big moves that could move the market. Retail sales were back in negative territory at minus 0.4%. So after having a decent run for most of 2022, we only saw 4 months that fell into a decline, but we saw this big push in the last reading. But again, because retail sales data is a couple of months behind from when it's released, we were expecting quite a big jobs number because of the holiday period that has ensued in America as well. Obviously, Thanksgiving and the Christmas period as well. So this is something that we are looking at quite momentarily, because it is a big driver in where the economy is going for the rest of the year. Are we going to get a recession? Are we not going to get a recession? This is a big, or is it a controlled recession, as the Fed have said? And we're not going to have such a big crisis in the near term as well. ADP businesses were down to 145,000. This was a consensus of 200,000 last time around. So ADP is private sector businesses, so they are not going too well in sorry, in the last reading. But if we look at what we've seen for the majority of last year, we've seen quite big jumps above 200,000. So it is a progressive jobs market in ADP. It's just not progressive enough. So this is something else that we're looking at as well as we go into the NFP data. So let's just go on to the charts as well. So I've got it on the other screen at the moment. Just bear with me. So you're just seeing me now. It's don't be too afraid. I'll just share my screen once again. Just going to put my MT4 data onto the chart so that we can see everything that's been going on. So as I said, gold is closed today, but I just want to take a look on gold because it has been very interesting. I put it onto the 4-hour chart at the moment because since we've had the banking crisis in the US, we've had these three big banks, unfortunately, ceasing now to exist, selling off all their assets and everything like that. We have been told by the Fed that the rest of the deposits in the banks will be clarified and completed by the Fed. It will be protected, but it hasn't stopped gold from shooting quite high. We're over 2,000 now, and it looks likely that it might probably keep holding over there. I'll just put it onto the 1-hour chart because I just want to show you even further what we're looking at the moment. So in a bit of a bearish channel at the moment, but the consensus is that this is just a slight correction. This is a little bit of a false spike here, so I'm not going to get too overjoyed with it because we are now looking likely that if gold does stay above 2K, we probably will start seeing another move to the upside because obviously, as you can see, we just take this away. As you can see here, 2000 seems to be quite a nice support for gold before we might start bouncing higher, but it will be the next downturn that we will see. If we start moving towards 2000 and then possibly have a bounce and start moving higher, then we'll see this kind of zigzag bearish formation continue. But 2000 is a very good support now, whereas before it was a big resistance for gold. And as you can see here, we were actually finding triple tops on this particular area at 2000. Hi, Jolly. Thank you for joining me. Any questions that you may have, please let me know. And as I said, any of our traders that are watching, please let us know for any of the markets that you are looking at. Unfortunately, as I said before, if you're just joining me, most of the markets are closed today due to the Good Friday Easter period around the world. However, the FX markets are open. So these are the ones that we're going to pay more attention to today because obviously gold won't be moving at all. I just wanted to look on it because we're just seeing now that there was such a big move on gold because of the banking crisis. And is the banking crisis over? Is there more to come? According to Joe Biden and the Fed, it is actually over. It is something that happened. There was a bit of less confidence in the banking system, and we can start moving possibly a little bit lower. But however, we can actually see more of a downside as well. So we're just seeing what's going to happen in the near term as well. So yellow metal looking very, very buoyant, very, very good in the near term. Just to let you know that the chat overlay needs to be in English, unfortunately. I'm sorry about that if it's going to hamper anyone. It's just that I can answer the questions more easier in English and also give you more of a outlook in English as well, because this webinar is in the English language. So just apologies about that. So let's just go back to the euro dollar before Daniel joins me shortly. So at the moment, the euro dollar has been a little bit subdued in the sense that the dollar has been on the back foot. As I said, the banking crisis has pretty much propelled every single FX pair against the dollar to the upside. So as you can see, euro dollar here and pound dollar pretty much look like the same reading. And if we go on the opposite side of the coin, dollar yen, it's looking likely that it will continue the same degression as well. So where does that leave us though? Where we heading for in the next few months? Well, let's just go back to the euro dollar. It's looking likely that if the Fed starts easing, if we start going a little bit more higher in the market sense, then we could see the Fed take a more proactive course to start easing on its rate hikes. Thank you for your question, Jolly. Will Good Friday affect the NFP news? It possibly will, actually, because we've only got the FX markets open. If you're asking about the actual job number, then possibly not, because at the moment we're just seeing that we are looking now. Sorry about that. Just have to go back to the charts, just quickly go back to the charts view. At the moment, as I said, we're expecting a consensus of just over 230,000, 240,000, something like that. If that gets hit, then it won't be much of a surprise and the markets probably won't move so much. But we're not expecting the markets to move that much, because when there's less traders in the market, there's less liquidity, meaning that we could possibly see not really a big performing non-farm payroll at the moment. But stranger things have happened, and we could actually start having more of big spikes in the market. But to answer your question, Jolly, thank you so much for sending your question. We are looking likely that it will probably hit the consensus and that we won't really have too much of a move in the market. But that being said, we could see possibly another big move for the dollar, because it's all about the dollar going forward. We are seeing now maybe if we do get the unemployment rate very off the mark, it's looking likely that it's going to be the same. The only thing is with the NFP data today is that we usually have the Canadian dollar open, other markets open to kind of move the dollar and all the other currencies. But because it's a bank holiday in most of the world, we might not see such a big move. But, as I said, stranger things have happened, and we are now seeing possibly the likelihood of where we're going to be going next as well. So just bear with me 1 second. So hi again. Just have to see my face in the magnified once more. So what we're seeing here, if we look on dollar yen as well, we've had a few people, a few of our traders and viewers asking about the dollar yen. We just got it on the 4-hour chart now. So basically what we're seeing now, banking collapse. Now we've started moving a little bit higher, because obviously when Janet Yellen, when Fed Chair Jerome Powell, when Joe Biden did say that this is the last of the banking crisis that's going to be happening, we did see an upsurge in the dollar. It did actually start recovering. But since then, a lot of traders have become wary about where the dollar is going and how worried they are and unoptimistic that the banking crisis is over, and also the Fed will start easing on their inflation, their rate hikes as well. So this is what we're looking at the moment, as of today. This is why we've seen quite a big fight back. And obviously, oil is closed today, but as you've probably heard, that OPEC will start reducing production of just over 1 million barrels per day, and this has affected the oil market as well. We've actually seen oil now start progressively moving towards the magical $100 margin. But what OPEC were trying not to do is to get oil to start dropping to $60, $50, $40. They wanted to stabilize the market. So in doing so, by stabilizing prices, they agreed to start cutting the output. And this is why you saw oil start moving higher. And this is what is essentially what OPEC is trying to do. They're trying to basically stabilize the oil market so it will not fall like it did a few years ago back into negative territory, when it was, so oil was so cheap that it was actually quite comical. So this is what OPEC don't want to do anymore. They don't want the oil to start falling quite significantly. So that being said, same as the dollar yen, we're now looking likely that possibly I had a trader that was speaking to a few days ago. They said, what about the 140 handle? Well, the problem is the 140 handle. We saw this the last time around at the back end of 2022, the back end of last year, and then we had quite a progressive move lower. So the 140 handle, I'll just point it out for you, is roughly about here. Since then, it's been very subdued below the 140 handle, and this is due to obviously a more weaker economy in certain parts. But with China reopening and with Asia in general getting back on track, we could see um, the dollar yen actually fall even further. We're having a little bit of support, roughly about the 127 handle, but will this give us more of an impetus that prices will start moving in the opposite direction to the dollar? We'll have to wait and see, but it's a very good reasonable worry that the dollar is on the back foot at the moment. So I had a few traders asking me about Bitcoin as well. We did say that Bitcoin at the beginning of the year would hit 30,000 by the end of the first quarter. We were just a few dollars off of that. Obviously, I'll point out the 30,000 area. As you can see here, again, I've got it on the daily chart. As you can see here, we're just traveling up to 29,000. So we're $1,000 short. So it wasn't a bad prediction, but at the same time, we're having a consolidation now with Bitcoin. So just be careful because there's a lot of factors affecting Bitcoin. Obviously, the banking crisis saw Bitcoin shoot up quite significantly. You know, if you think about when the banking crisis started, the Bitcoin was on about 20,000 and then it ended at 29,000. So $9,000, sorry, in just over a week or so. So these are the big fundamental impact news events that we should be looking out for if we're trading not only cryptos but Bitcoin as well. So Bitcoin in the near term looks likely that it might be progressing higher. We're in a nice consolidative phase now, and this gives us the impetus that it might start even moving higher, going into a bit of a wedge formation now, and we're just waiting for the breakout. You know, we could have another move up and then resistance and then lower, and then we could get that magical 29,000 sorry, 29,000 and $30,000 area to be broken. So this is what we're looking for in the near term as well for Bitcoin. So very exciting news when, unfortunately, when the banking crisis did actually come into the news events, you saw what gold was doing, you saw what Bitcoin was doing, and even the US stocks as well. A lot of people, a lot of traders, sorry, started really buying tech stocks because they seem like a safe haven towards the banking stocks. And we saw these start moving higher as well. So lots of factors to look into when there is quite a big move in the market as well. So Daniel's just joining me now. I'll just let him in the room. Hi, Daniel.
Hey, is it working?
Hi. How are you doing? Thanks for joining us again.
Good, good. I just making the new system apparently, just making sure everything works.
Okay, great. So thanks for joining us. I was just telling our viewers about it's a bit of a weird one this time around because as you reported on your article as well, it's a bank holiday for most of the world, but because
Yeah,
it's not a federal holiday, the NFP is going ahead, and it's pretty much the only news event that's going ahead today, isn't it?
yep. That's the only reason to get up today is to go
Yeah.
check out the NFP. I think the futures treasury markets is open is the only thing that's open, but they're open to like three. No, so it'd be 9:15 Eastern time, so it'd be 3:15 European time, I think, like that. But you can only trade bonds, I believe, on that one. So there probably won't see very much going on in the markets.
Yeah, exactly. I was just about to say, we probably, I mean, even if the consensus is met, or even if we do get a little bit more of a jobs report than the consensus, do you see the markets really actively give us any shocks?
Well, not for a couple days. Like, so for now, we have everything will be closed through the weekend, and
Mm.
then we have some of the markets in Asia opening, but not all of them. Like Japan, I believe, opens, but Australia, which is usually the first one to open, Sydney is the one that usually opens the Asian session, then won't be open. Neither will
Hmm.
New Zealand, and Hong Kong is also on holiday, so we get Japan, China. So there'll be kind of like significantly less trading volume, so there
Hmm.
might be a bit of different reaction. Then, of course, Europe, most of Europe is entirely closed on Monday, and then
Yeah.
it's only until Tuesday when everything gets back to normal. So that's probably there could be an initial reaction when the markets open, and then that could get corrected, and then there could be some movement, and then finally out by Tuesday you'll know what the final market reaction will be. So it's also unusual.
Yeah, it's unusual because, yeah, like you said, we could wait until Tuesday to see a reaction from the market because obviously with less traders in the market today, there's less liquidity, so less volume and less
Yeah.
of everything really. So it could be rich literally until the market really wakes up on Tuesday next week or maybe even Wednesday.
Yeah, everyone's off on spring break having a lots of fun, and
Yeah.
unlike us.
Unlike us, we're reporting on the NFP, but we do it anyway because we love the reaction of the market. So I just wanted to
Yeah.
ask you, Daniel, do you think with the recent banking crisis that's really propelled gold and Bitcoin, do you see it as being over now completely after Janet Yellen's comments, after the Fed's comments, after even Joe Biden's comments, or is this maybe still some ripples in the water?
Well, that's the thing is that right before SVT went down, practically no one knew the SVT was going to go down. So prior to that, all the authorities were saying, "Hey, everything's fine, we're doing great," and then suddenly, no, no, we're not.
Yeah.
So that's kind of the situation that we're in now. What is going to be the next shoe to drop is always a matter of speculation. So the thing is, the way the situation is now is you're getting a lot of stress on the market. It's just more and more stress. The SVT will also add more stress to the market. So it's just a matter of seeing, what situation could, basically guessing where the next pressure point will be. But also from the SVT situation, this has been a bit of a relief. So the Fed is sort of starting to reverse its quantitative tightening significantly. I think it's almost gone back more than half of it. So that pull down the yields on the treasuries, and the treasuries going yields going up are what pushed SVT into having that significant problem.
Yeah,
But
true.
then also you end up with another problem, which is with the commercial mortgage-backed securities, because the new program that the Fed came out with is that it allows mortgage-backed securities, MBSs, and treasuries to be rated at par value. But now they left out commercial, so this is why First Republic Bank was in a lot of trouble. But now then you have all the other banks that are coming to rescue it, so it's sort of evened out. But then there might be another bank that's going to have a different problem that will show up, and then suddenly we'll be talking about banks again. But the
Yeah,
main thing is, high interest rates put the banks under what generally high interest rates are good for the banks, because that means they can charge more, they get a bigger net interest margin.
hmm,
So but the problem is they've invested so much into treasuries and also mortgage-backed securities, that when the high interest rates go up, it means that their holdings technically lose money. But it's unrealized losses. So as long as they don't have to sell it, they're fine. But if people start pulling out money for whatever reason, then they get into trouble. And so the question is, what bank is in a situation where they start, more actually, it's not so much what bank, but what situation can happen that will cause people to pull money out of either a specific bank or a certain group of banks for some reason. Like, I don't know, the inflation keeps going up and people need more money to keep buying the stuff that they're normally buying. Then they're going to have to take out more money from the bank, and then that's going to cause more problems. So this is like one of why the things we've been really tracking, how much money depositors have been taking out of banks recently, and they're following SVT, there's a significant increase, but so far it's still been going down. But there's like $120 billion they've been
yeah.
taken out of banks. That puts them into significant more stress. So if depositors come back, people start putting their money back into the banks, then that particular stress point will start being relieved. But if there's another reason for people to withdraw money, then we're right back to where we started. So yeah,
Exactly,
it's all
exactly, pretty
guessing.
much. Yeah, it is, and it's the confidence of the consumers, so of the
Yeah.
customer as well in the banks, because obviously we saw the sell-off in Deutsche Bank not so long after, but there was nothing really so wrong with Deutsche Bank. It was just a fact of like, confidence really starting to wane on a lot of the banking sector, and then we
Yeah,
saw,
yeah. Deutsche Bank had kind of a shaky reputation for the last several years, and so finally they're starting to fix it. And then everyone's like,
yeah,
"Hey, this Deutsche Bank, we used to be worried
yes,
about them. Maybe we should."
yeah. Let's pull out our funds and sell the stock quickly.
Yeah.
Danny, I just wanted to pick your brains quickly with gold because I was telling our viewers before you joined, like obviously saw the ascent on gold because of the safe haven against the
Mhm.
banking crisis. We've jumped over 2000 now, and we seem to be holding for the first time in quite a long time. We had a bit of resistance a few months ago on gold at 2000. Do you
Right.
see possibly? I'll just put it on the daily chart. Actually, no, let's go weekly chart. Actually, do you see gold really progressively going back to the regions of like 2050, $2060 in the next quarter, or this quarter that we've started?
Well, that a lot of it depends on what the Fed is going to do. Really, I
Hmm.
would say because um, one of the reasons to invest in gold is that you think the dollar isn't going to be worth so much.
Yeah.
And of course, if the interest rates are going up in dollars, then it's a lot. If it's worth more to put your money into treasuries, because treasuries will give you an interest rate, whereas where gold doesn't.
Hmm.
And then of course you have the difference that you have to consider with inflation. So the
Yeah.
expectation is inflation is going to keep going down, which reduces the demand for being in gold. If inflation is expected to go back up, then you could see gold getting another boost. So the question is, if the Fed stops hiking rates, or in some way signals or gets people to think
Hmm.
that if they're going to let inflation keep going up, or they're not going to keep push inflation further down, then that could give another interest in getting back into gold. And then you could see the price going up, because also the dollar is going to get weaker, because the treasuries won't be worth as much. So it really comes down to, I think, what's going to happen with the Fed, not only, but also uh, what's going to happen in a few minutes with NFP could is do
That's true. Yeah.
the expectations for the Fed, and also next week when we have the CPI for the United States, which will also shape for the Fed as well. So you can see the 2 points leading up to the big thing, really, I guess, would be the Fed. So you
Hmm.
might see gold sort of trying to push above, uh, but the fundamentals are kind of like waiting on the Fed, most likely, I would say.
Yeah, sure. I mean, yeah, it is a big catalyst for the move on gold. But as I said, I think a lot of traders are waiting for the moment or the month where inflation might just pick up a little bit, because it's been on the downturn for the last 8 months and we're now at 6% year on year. I think
Yeah,
if
yeah, there
if
would be
we
a
get that
correction, right?
little
Yeah.
spike, do you think we might start seeing, the dollar start collapsing and gold start moving through the roof? Because in Europe, the inflation did pick up slightly in the last month, and even in the UK. So is it a
Yeah.
sign possibly of things to come? Because naturally the Fed just wants to keep the the inflation to keep dropping every month,
Hmm.
and month on month, year on year. But there could be that slight 1 month where you know the panic starts and panic sets in, and then all of a sudden gold starts flying flying through the
Yeah,
roof again.
that's a really good point, especially with what happened, with OPEC here now pushing up
Exactly.
the price of. So that's the other thing, is that the Fed is really focusing on the PCE and the core inflation,
Hmm.
and they're not considering the more volatile elements. But when it comes to considering whether you're going to put your money into treasuries, or whether you're going to invest in gold, you're considering the headline inflation, because that's what affects the consumer. Like,
Yeah.
what are your dollars going to be worth later in the future? So if you get a rise in the headline inflation because of what OPEC Plus just did, then yeah, then that could create that rebound that you mentioned, and the Fed might not address it, because the Fed might say, well, this is short-term volatility. We're focusing on the core, and the core rate, if I remember correctly, the core rate is expected to continue to go down by 50 basis points, or a half a percentage point,
Hmm.
whereas the headline is kind of going to remain relatively steady. And so add into that, maybe the headline goes up a little bit and the core keeps going down, then you could end up with the situation that you're exactly are describing.
Exactly. Yeah, exactly right. So we're just under 2 minutes away from the NFP. It is, like I said, it's a little bit weird, because on my economic calendar, I'm just seeing NFP and unemployment rate. Basically, I'm not seeing any other. Usually we've got like NFP for Canada as well. Unemployment rate
Oh
for
yeah.
Canada, some other thing, maybe PMI data later on, services data, I believe, sometimes on some months. But this time it's pretty much NFP, and then let's turn our PCs off and go
And
back to
have a
sleep.
good vacation, have a
Yeah,
good
have a
weekend.
good weekend. Exactly. So
Yeah.
it's a little bit subdued. But just to pick your brains, just on the one more minute that we've got, would you say that OPEC and the banking crisis have kind of thrown fuel to the fire now with the Fed, or confused them a bit in their next meeting?
Yeah, because you have two things pushing in opposite directions.
Exactly. Yeah.
So the question is, which one are they going to put more emphasis on? Because last time it was sort of like, we're going to raise rates sort of to communicate that we're not really worried about the banking system, and then next meeting they'll let us to not raise rates to give the banking system a bit of respite. But then of
Yeah.
course OPEC comes along and raises inflation, and they might have to change that position. So it's really a guessing game to say which one of those they're going to prioritize, because that's
Hmm.
kind of a personal opinion. For the members themselves, you'll have people like well, Brainard's not there, is not going to be around very much longer, because she's moving on to the national Economic Advisory Council.
Mm,
But generally, she had the view of we're going to focus on reviving the economy much more, and so she would be much more worried about the banking system, whereas you'll have someone like well, Kashkari, for example, he's much more worried about the employment situation, and
mm.
so you can each one of those are going to push their own their own view, and then you're going to have to like since there's 12 people, you're going to have to sort of guess which one of the 12, which one of them are going to focus on what, and then it's a kind of complicated thing to try to figure out.
An exciting guessing game, at least at the end
Yeah,
of the day. So just having the data coming in now. So non-farm payrolls coming at 236,000 against a consensus of 239,000. So not really too much in it, to be honest, there, Daniel.
yeah, pretty tepid.
Yeah, unemployment rate just dropped slightly at 3.5% from 3.6. That could cause a little bit of a slight dollar bounce, and we're seeing a slight dollar bounce at the moment. But let's just see
Right.
how many pips we're looking at. So euro dollar, we've just gone just on 25 pips, just receding now to 13, 14 pips. Not really too much in the way. I've got gold on the chart just to have it, even though it's not moving. It's just a force of habit. But
Yeah.
so not really many surprises here. Dollar yen's moving, but again, I suspect that's probably just about 20 or 30 pips. No, it's up to 50 pips now. Yeah, so not too much in the way of surprises there, and a lot of the markets are already retracing the cable, euro, dollar. So not really too much to shout about. But it's a good jobs market, though. I mean,
Yeah.
236,000. It's a decent run.
Yeah, it does seem a bit like an algo trade on the unemployment thing, as you mentioned. You know, it goes bounces down and then they come in and correct it and it starts
Exactly. Yeah.
going back up. Uh, the other because the unemployment rate, if it goes down one decimal, it's kind of like almost rounding because
Mm,
the 3.6 that existed prior was rounded from something, and same thing
yes.
with this one. So the one decimal point really isn't all that much difference, even though when it comes to unemployment, a decimal point can end up being kind of significant. So
Yeah.
yeah, the question is it a rounding or is it a change? And with the 230 coming in pretty much in within expectations, seems more like it's a rounding thing.
Exactly. I was just commenting as well before you came on air that the US weekly jobs numbers are just hovering over 200,000 as well. So not really too much change in that respect, especially when we had the pandemic when it was over, 1 million every week that was
Yeah.
applying for new jobs. I mean, this is only 200,000. So, the jobs market, you could say it's kind of getting back on track. It is taking a little bit more time than usual, but it is actually getting back on track
Yeah,
slowly.
that's one of the things that's really distorting the situation is because there's a lot of people aren't coming back to work. There's a lot of open jobs, but
Yeah,
there aren't as many people to cover them. So what you end up happening is that basically, if you want to get employed, you can get a job, and so even though they're not necessarily more companies out there hiring, you can still end up with increased numbers of people getting hired because there's
yeah,
such a that wide gap that's floating around. So
exactly.
and that also of course keeps the unemployment rate further
hmm
down. I was just trying to look at the components because usually but they're all going to be in line, it seems. Oh yeah, and the other thing is you have like the initial jobless claims. They've been slowly, like very slowly creeping up, and
hmm
that's kind of can be a sign of that this gap between the amount of uh, open jobs and the amount of people looking is starting to close. You know, before it was like over 6 million, and
hmm
now it's down to about 4 million. So it's starting to normalize, and then and then also has been translated. ADP mentioned that the amount of money that people are making on an hourly basis is starting to decline slightly. It was the first move down, I think it was, since the pandemic. I'm not sure the exact date, but
That would
it
be
was more than
interesting.
2 years. Yeah.
Yeah, definitely. Just to want to pick your brains again on with Bitcoin as well, Daniel, because
Oh,
we had a few of our clients just asking. I did a little bit of an analysis before you came on because we were expecting the 30,000 area to be hit just on just at the end of the Q1, we got up to 29,000, and that was pretty much due to the banking crisis. Because obviously, when the banking crisis did start, a lot of traders did flock to Bitcoin and gold as well, because obviously cryptocurrencies are behind the banks. So
Yeah.
it's something to look at for the future cryptocurrencies. But for the moment, do you see Bitcoin maybe you know having another push to the upside in the next quarter? Obviously, if the banking crisis is behind us, do we look at another outlet rather than gold as a safe haven, would you say, against the dollar?
Yeah, this is where crypto is a little bit different because yes, it provides an alternative to the
Hmm.
dollar, um,
Exactly.
but on the other hand, it's still kind of speculative. You have these wide swings in prices, and so a lot of it is still due to how much what we might call easy money,
Hmm.
where you have low interest rates, allow people to borrow more money that they can then go and margin on buying, well, in this case, Bitcoin. So
Hmm.
uh, those two things are kind of pushing in opposite directions. So the one of the things that the market's kind of pricing in that the Fed is going to be forced to cut rates in the near future. So you could have a situation where there's another bank failure or another bank run, which is going to push people to be interested in cryptos.
Hmm.
And then at the same time, the Fed is going to cut rates, which is going to allow more uh, people to speculate more with Bitcoin. So you could get that double push going in the way to pushing crypto higher. But then, of course, this is very hard to, virtually impossible to time that if it actually is going to happen. But then you could have it that the Fed actually follows through on what it's saying and it's going to keep interest rates higher. That's going to make it harder for people to borrow money to trade Bitcoin on margin, which would keep Bitcoin a bit under pressure, even though with there's more interest, growing interest in Bitcoin. So you could then that would presumably, I guess, push Bitcoin slightly higher, slowly pushing it up, because then of course you have the inflation issue.
Hmm. Yeah.
Whereas if because when even if the Fed holds rates and if inflation might not come down as fast as everyone's hoping, and if inflation remains high, then there's another reason for people to get into crypto, and then crypto will presumably at least maintain the inflation level. So these are different factors, but again, it really comes down to what the Fed's going to do, which is always a bit of a problem for the markets because if you have one single entity that has so much power, depending on what it does, it makes it a
Exactly.
lot harder
Yeah.
to yeah
It's a
to
bit of
figure out.
a double-edged sword, isn't it? Because we've
Mm,
seen the big swings in the past with Bitcoin. So we either, go all in with Bitcoin, or we just
yeah,
kind of like stay away from it. I think that's what a lot of traders are doing because, with the banking crisis, it was a bit of a predictable move that we would see a push on Bitcoin like we did on gold. It was very predictable. But,
yeah,
as soon as it was kind of over before it began in a way. I remember, I think it was this NFP last time around that SVB was kind of going under. I think it was about a month ago. But with the banking crisis, it did last a couple of weeks. But in market terms, it was just kind of like it happened, and then it's kind of okay. Let's move on to the next story. So we're just waiting for the next story, whatever that may be, to start really pushing Bitcoin and the gold and moving the FX pairs as well. So it's
yeah.
quite an exciting time. Unfortunate time for obviously people in the banking sector, but an exciting time for traders because there's big opportunities when there are these big fundamental news events, aren't there?
Yeah, especially going now through spring and through summer, you get a lot more optimism and you get an increase in volume, and
Yeah,
more people are interested in the market. So you could have generally good conditions going up until early September, and then suddenly things turn around. Same thing happened like last year. You had the summer rally, and everyone was
yeah,
like, "Hey, everything's going all right up until September," and then the whole rally that happened during the summer was wiped out in like less than a month. So
yes.
we could have another repeat of that, which means now is a good time for getting in and to trading to consider, because ultimately as a trader you're looking for moves up or down, but you just have to be careful to make sure you're getting it right.
Yeah, getting on the right end of the up and downs, basically.
Yeah.
Okay, Daniel, thanks for that. We're just looking now that the dollar pairs are kind of progressing in the dollar stance. So it possibly, a little bit more optimism on the dollar environment, and with this unemployment rate just slightly dipping, we're just seeing more of confirmation, especially with the euro dollar and cable. We did get these spikes and reversals, but now it just seems to be covering the gap now. Both pairs really pushing 30, 40 pips. Okay, it's not really such a big move in the market, but it's a slight progression, you could say. If we go on the maybe 4 hour chart for euro dollar, let's say, we can see it's broken the previous support that we had roughly around the mid 108 handle. Do you see the euro dollar, just to finish off on the NFP, Daniel? Do you see the euro dollar, for example, because it's quite a big traded currency pair? Do you see it reversing at any point? If we go into the daily chart, we saw, sort of on the weekly chart, we saw this big digression due to the Fed tightening for most of 2022, and then obviously a lifting. But now, do you see any sign of kind of like a V-shaped recovery here? We've gone on one side of the V. Do you see maybe it getting back to the dizzy heights of the 120 levels, possibly even by the end of this year? Let's give it 9 months. Is it possible?
Oh, well, actually, I wrote an article on that is precise point. I
Exactly.
think that
That's
was
why I
just put up
thought
today.
I'd pick your brains to elaborate a bit more.
Oh yeah, yeah. So the thing is that moved onto the downside was basically because of a gap between in the interest rates that happened with the Fed and in the ECB, and
Hmm.
so now because the Fed was much more aggressive and they started earlier, and then the ECB came in slower. But so now this situation is sort of reversed. The ECB is seen as raising rates much higher. They're still talking about another 50 basis points at the next meeting, for example,
Yeah.
whereas the Fed
Yeah.
is in between pause or just 25 basis points. So
Hmm.
the Fed is about to reach its maximum, and the ECB might continue further. So if those conditions maintain itself, then the rate should probably normalize, and normalize means kind of return to about the 120 handle, which is where it was. It was between 120, between 110, 15, 20. So that range kept fluctuating back and forth
Yeah.
right before the pandemic. And so
Hmm.
the idea would be, okay, we're finally getting all the pandemic distortion behind us, and once the Fed reaches its rate, it's going to stick there, and the ECB is going to get their rate, and they're going to stick there, and then it would more or less you know reach that level that it was prior to the pandemic. But then, of course, there are things that could happen in the meantime. The Fed might be forced to cut rates if there's a recession, and then
Yeah.
also same thing might happen with the ECB. But the thing is, the United States had a stronger rebound, which means that if they're going to go through a correction type recession, then it would the United States might suffer a bigger recession than Europe did, because Europe didn't really have all that strong of a rebound. And so
Yeah.
then that could lead to a situation where the ECB doesn't have to cut rates, whereas the Fed does. And so
Hmm.
that could then, really push the euro significantly higher. But then, of course, you could have a situation where both kind of manage to get through, or the economy in Europe doesn't perform as well as it does in the United States. And then the ECB doesn't raise as much, and the Fed might end up raising a couple more hikes, have a couple more ticks going up, if there isn't another banking crisis, as we were discussing previously,
Yeah.
and then it could keep below. But the things are kind of pointing towards, at the moment, they're sort of pointing towards the situation of the euro pair moving higher, mostly based on the ECB seeing as it necessary to raise rates because inflation keeps rising
Hmm.
in Europe. So now, if something could happen that would turn inflation around in Europe, like even an end in the war in Ukraine, for example, might not necessarily turn around the inflation, because Europe won't go back, most likely won't be going back to buying the relatively cheaper oil and energy from Russia. So
Yeah. True.
there isn't like any escape valve for the high inflation, except for a significant recession. So,
Hmm.
but usually, in order to have a recession, you have to have growth to have the correction. A recession basically is excess inventory of some element, right?
Hmm.
And so if you haven't had the economic growth to build up inventory, then unlike in the United States, for example, if you go look at a lot of the retailers in the United States, they have a large amounts of inventory because they built up a bunch. They're expecting sales increases, but the sales increases haven't manifested. So that means the next step of building up inventory is that they're not going to be ordering as much, which means industrial production goes down, and then you get your traditional recession scenario. Whereas in Europe, most stores don't have excess inventory. They haven't built up the inventory. So there isn't like a catalyst that would push your typical relatively short recession that would clean out the economy like you might expect from the United States. So
Yeah.
so everything's sort of like stacking up for the fundamental reasons to push the euro higher for now. Unless something like a banking crisis or some other
Mm.
major thing happens in the meantime. So,
Well, there was talk of a controlled recession, whatever that means.
yeah,
Whereas it might not plummet the currencies or whatever, whatever economy does fall into a recession, it might not be as bad as previous recessions. So we might not see, if Europe falls into a recession, let's say, we might not see such a collapse on the euro pairs or the euro stocks as what we've seen in the past. Do you think?
yeah. Well, that's the thing is how hard is the landing going to be? And so since Europe doesn't
Exactly.
have, doesn't have such a large growth problem, it might not have. Well, growth isn't really a problem, but it does push you towards the more like state of a recession. So Europe might have a softer landing than the United States. It might have more of a controlled recession,
Hmm.
particularly since Europe has one more capacity to increase deficit spending
Mm.
because they're not in the same position as the United States where they have such a large deficit in government spending, and then number two they have because they don't have the large inventory growth, and the ECB hasn't raised rates as much as the Fed has, so the ECB doesn't have as much going down. It doesn't have as much cutting to do as the Fed would in a potential recession as well. So yeah, it's another thing that could keep the euro a little bit higher than the dollar for the moment in the
Yeah, I mean,
short
if
term.
we look on exactly, if we look on technicals, we're just waiting for the next break on this particular, roughly about the mid 110 area, for it to
Yeah,
start moving higher. So this is what a lot of traders are looking for in the near term as well. Okay, Daniel, great. Thanks for that. Thanks for that insight, and thank you for joining me once again on the NFP.
thanks for the
Um,
invite.
no problem. I think next time around we'll make sure it's not a bank holiday, and
Yeah,
we'll make sure there are a few more things going on in the market, and maybe a few more surprises as well, because obviously this is what gives us and the traders the big opportunities when we see big moves in the market, so we can capitalize on them and jump on them
exactly.
as well. Okay,
Yeah.
great, Daniel. All right, then. Well, thanks again for joining me, and we'll catch you next time around. Thanks
All right,
again.
then. Have a good weekend.
You too. All the best. Bye for
All
now.
right. Bye.
Okay, bye. Okay, well, that was Daniel joining us for his insight, and what a great insight it was. So, just looking now, just bring you back to what we're looking at in the near term for the currency pairs that we're looking at, and the Dow and Bitcoin as well. So, I'll pull this a little bit more. I'll expand the screen, sorry. So, like we said, we saw this like 30 pip, 40 pip move for cable for euro dollar. We're now seeing a nice retracement back up to the 108 handle, or the 10, going towards the 109 handle, sorry. So we've dropped. The last time I looked, it was 30 pips. Yep, just under 40 pips. But with the retracement, we're looking at 20 pips now. We're seeing possibly, if we can get confirmation from this previous support, this previous double bottom that we've seen, roughly about, once again, the mid 108 handle, we could possibly see more of a move to the downside. We saw this not so long ago. The V-shaped recovery that we saw here, this is when the banking crisis did start beginning. And then obviously we've got this huge move to the upside here, roughly around just under 200 pips. But since then, like I reported just before Daniel came on air, we're in this kind of bearish channel now, and we're just seeing if it's going to continue, because obviously with every big move to the upside or downside, there's always that possibility of a reversal. And even though for a lot of traders it looks bleak if they're looking at the bullish stance, we always look at the bearish stance as well, because it does give more opportunities in that respect. So where is it going next? As I said, we're just waiting to see if this break here is going to keep on pushing lower. It looks like it's heading for a doji now, especially on the 4-hour chart, because we're seeing that prices are reversing nicely as well. Just to look on cable as well, similar thing. Cable and euro dollar have been pretty much moving in tandem, moving at the same pace, sorry, for the last few weeks. roughly 40 pip move, now retracing nicely, 15 pips at the moment. So a little bit like the euro dollar, we are now in this bearish stance where we're just waiting for the next move to the upside or downside. Very, very choppy on that descension as well, looking likely that we will probably keep continuing. If we pull it out to the 4-hour chart like we did on the euro dollar, as you can see here, nicely with the trends moving in the same area here. So we're expecting possibly another move lower if we can find support at this particular area, at the lower channel. We could possibly see another move higher before we get sorry about that, before we get another confirmation downwards as well. So this is what I'll be looking for to see if we get any more of this movement as well. Gold, we don't really need to look too much on because it's closed today. We reported on it a couple of times since this NFP engagement has happened, since the webinar has been going. We're just seeing now if we can get some support at the 2000 area to have another push to the upside as well. We'll look on dollar yen, a little bit like the opposite of euro dollar, pound dollar, because the dollar pair is quoted first. We've moved 70 pips, now just retracing slightly to roughly about 60 pips. Dollar yen has been a little bit tricky because we've seen this big move to the downside for most of the year. And now we're seeing this kind of choppy action here. So V-shaped recovery to the downside has progressed for the dollar yen. And now we're just waiting to see where the next consolidation or breakout will be for dollar yen. So very, very exciting times as well. And just lastly, on Bitcoin, not too much to be said about that, but just give you an overview. Obviously, banking crisis, resistance now. And now we're just seeing what the next move is. Obviously, we're in this kind of bullish channel at the moment, but we're waiting just to see if we're going to have more of the same upside as well. So that's all from this month's engagement of the NFP. Thank you so much for joining me. It's been a real pleasure. Apologies again that it was a bank holiday and the Fed did continue this NFP engagement. We kind of knew that the markets wouldn't really react too much. The consensus was pretty much spot on. I'll just go through it one more time. So we were at 239,000 new jobs were supposed to be added, and 236,000 did come in. So it's been quite a long time since we had such a close actual jobs number versus the consensus. So this is something that is been quite boosted, and the unemployment rate fell by 0.1%, so 3.6% to 3.5%. So just something to take into account there. So don't forget that today is a bank holiday for most economies. Monday is a bank holiday for a few economies as well. So if you are trading weekend gaps, you might get better luck on Tuesday. If you're looking for the markets to reopen and start adding volatility and liquidity, then Tuesday might be a better round. But obviously, take a look on Monday. We'll fill you in with all of our insight on our Telegram channel, on our YouTube channel as well. And once again, thank you very much for joining me. And until next time, have a great trading day, a great weekend ahead, and we'll speak again next time. Bye for now.